All right, let's come back here and take a look at the dot-com and the financial crisis again. Just kidding. Guess what this is? You probably don't have to guess because you can see it right up here. This is the Nikkei. This is the Nikkei blow off top, and we have all the familiar lines in here from a sovereign debt bubble. So let's take a look at our long-term support trend line here, and our financial crisis analog trend line here, and our volmageddon analog trend line right here. And you can see the ever increasing steepness every time you get a new trend line. And let's take a look at uh, these tangent lines that go down to consolidation zones here. They don't quite line up on the corners like we're getting in our crash, but let's take a look at the timeline and the bull trap supports that they got on the Nikkei, and then I guess just talk about the Bank of Japan. The Bank of Japan was intervening this entire time, and they're famous for QE. I mean, they're really the bank that sort of invented or first experimented with QE. And I just wanted to take a look. I've heard people say that the Nikkei kind of crashed and then it trended sideways for a while, and that's not correct. The Nikkei crashed, right? And this is over a couple of years. So on our timeline, here's the initial blow off top that crushes the Volmageddon and the financial crisis lines and the bull run line, right? So this right here, this double top right here is where we are on our timeline right now relative to the Nikkei after Nikkei blew their Volmageddon and their financial crisis. And then this Volker line is that bottom line that I've been talking about wanting to break and backtest. And I did not even know that the Nikkei did all this stuff. I just realized that you could get this Nikkei chart on TradingView, and it has 1-day candles, which is pretty good. You can get a really good tight look at it. But I wanted to go forward and take a look at what trending sideways looks like for like 30 years. So we get our little blow off bottom at 36, and then 27 after we break the Volcker, and then consolidate down here 20. So this is the intermediate bull trap that I've been talking about that's going to run out towards the presidential election here. It didn't make it quite that far for them. They started in the beginning of January and it made it out to the end of July here, the intermediate bull trap. We're on a little bit longer timeline than the Nikkei crash, and I think we will get out towards the presidential election, but if this repeats, we could actually see this right at presidential election time on our chart. But I think that our bull trap will make it out to the election on our timeline. And that's what I've been talking about. And I had not looked at this chart as an example at all when I said any of that stuff. And this is really cool. And yeah, and then okay, so then we finally get this kind of outer tangent that doesn't get another bull trap or anything, and we just get a consolidation zone down here. So, I mean, this crash ended up being a couple of years. It ended up being a couple of years to kind of get a bottom on the crash where we started trending sideways, depending on where you want to consider the bottom. I mean, I guess you could consider this the bottom at the end of the year, but look what it did. So we go to 20 to 14, and then, oops, yeah, 14, 12, 7, 7, before we start going back up. And this is in '09. So let's get back over here. So it blew off in 90. So that's like 20-year bear market. And it got down to way less than half of this little initial crash area, or even this one. It got to half of this crash area over the next 20 years. That's not trending sideways. That's a bear market for 20 years after this blow off top. And this is with their central bank intervening the whole time and doing a monumental amount of quantitative easing. Bank of Japan is famous for quantitative easing. They're the pioneers of quantitative easing. And this is what quantitative easing looks like, excuse me, when you blow off a sovereign debt bubble. This is Brian Lewis with MMT Investing, and things just changed. So, yeah, so let's get in here and look at the actual shape of some of these crashes. And yes, they did get double bubbles for like the dot-com financial type of thing also. I mean, the analogs on this Nikkei chart are insane. So this is the Nikkei everything bubble blow off analog. And we get these. So this is in our chart, in our financial crisis, this is where we are. We're on this underneath the financial crisis with a double top right here on this bull line, looking to break it. And this is what happened when they broke that bottom support line off the double top. It screamed down to the Volker line on theirs, and then you get another crossover, break, and backtest here. So, I mean, that's the same patterns that we've been seeing on ours, right? You get like a little crossover, a break, and a backtest, right? And then you get a crossover here, break, backtest it, and then crossover, break it, backtest it. So that's kind of the idea with the lines. And also their crossovers are a little bit above the lines, and they get a lot of double tops before the breaks. You get double top here to break the bull trap support. Oops. And then this is just like a kind of a normal looking bull trap. It doesn't look like a double top there. But this certainly looks like a double top to break that bull trap support, and this one does too. So they got double tops to break the bull trap supports. So I'm going to take a bunch of these ideas back over to our chart and see if there's some more conclusions that I can draw off of this. But here's the Nikkei everything bubble with the same kind of support lines. You get these super long-term trend lines that get reactions all over the place, and then you break the long-term trend line with a crisis, and then that crisis gets you a steeper trend line, and then you break that trend line with a crisis, and then you get a steeper trend line up to the blow-off top. So this is the volmageddon blow-off top line, like our dead cat bounce, and this is the financial crisis, double.com financial crisis bottom, and that's the line that we have broken and backtested in our bubble. And then here is the long-term, this is like the everything bubble bull line, which is the Volker line in our chart. And that is what a sovereign debt bubble blow-off looks like with like out of control quantitative easing quantitative easing and money printing happening the whole time. This is what money printing does to prop up a sovereign debt bubble blow off. That's what it looks like. This is the Nikkei, and these are the same trend lines that we have right now, and they're almost identical, other than we're getting a little bit longer extensions on it. Well, I mean, not really. This is pretty close. I mean, they're getting yeah, usually, see, like this is what I was talking about in our charts, is usually when you get these kind of crossovers, it's like halfway through kind of the lightning bolt shape. That's more normal. It's more normal for those crossovers to be like just above halfway when you get this kind of lightning bolt shaped wave, or you could call it an Elliott wave or whatever. But in our everything bubble chart, we're getting those crossovers really high, and we're getting extended lightning bolt shapes, which is, it's making these tangent lines a little bit more asymmetrical, and it's also pushing the timeline out farther, because it wouldn't be like a it wouldn't be like a halfway kind of crossover to this point, or just above halfway. This is more normal for that crossover to be just above halfway here. But see, in our chart, we're getting the crossover, and then we're getting a really long extended thing to the consolidation zone on all of our waves. So that's why I think we're on a little bit extended timeline. This is January, February, March, April, right? So yeah, so this is pretty close to our timeline, actually. It's pretty close. We're just getting a little bit extended crossover kind of waves, and all of the other supports and kind of the consolidation zone, tangent lines splitting the bull traps, and that sort of thing is all the same, and you get these downtrend lines. And then once you break out of the initial kind of crash shape, which was almost the whole year here on the last consolidation zone, that last kind of outer tangent is just sort of a first bear market line, where you're not repeating the same shape and you're not getting a bull trap across it. It just ends up being a support line. Uh, and this is, you're already in the bear market out here. And that's what, almost 3 years? Yeah, like 2.5 years. So this outer tangent out here is not really part of the crash, but you just get like one more kind of bear tangent after you've completed all of the repetitive cycles. Then you kind of start sticking to the down tangents, and then you could keep drawing down tangents, wider and wider ones that get down to the consolidation zones. And those are just kind of bear market lines relative to the everything bubble top. All right, cool. I hope this was interesting. I'll try to get this thing out through TradingView, because I try to get these out and they crash, and then they won't publish publicly. It's like publish to private, and I don't know. I keep trying to get them out. So if you guys are watching on TradingView, please take a look at my YouTube channel, because most of my videos don't make it up on TradingView. I would get them all up on TradingView if I could, but I can't put my picture in TradingView, and they crash, and I lose all my work, and it really makes me angry and wastes a bunch of my time. So this is not investment advice, and I would not recommend that you go back and try to invest in the Nikkei bubble anyways. So thank you, and happy trading.